Hello, everyone, and welcome back to the lunchtime hour with Jose and myself. We are back. We are back with a red day, but one that has been improving a little bit in the last couple of minutes in anticipation of us going live. So we're here today to calm down the nerves, to talk about stocks, share our personal opinions on what's going on, how we're feeling in the market, and of course answering some questions as well. So first up, hello, Jose, how are you? For some strange reason, I cannot hear you. Took a while until chat noticed, and I was like, maybe I'm the one muted. Oh. In the meantime, I will just talk to myself here, as usual. Fun day today in the market, I would say. I think we are seeing some green in some names. Am I also muted or? Oh, like yeah, I'm good. Maybe I wanted to start revealing some state secrets here.
Testing. Any luck?
Now I can hear you.
Oh man, I had all these amazing stocks that I was saying that were a great buy right now, and I completely forgot about them. So it sucks I was muted. But no, I was just saying.
Guess we'll never know.
I was just saying, Neil. Thanks to everybody that was around or is around. So let's just giving shout out to all the names out there, and I think that's all I really much discussed.
Okay, so no shout outs this time. You'll have to wait until Thursday to hear your username. But yeah, what can we say? Another day, another volatile day, I would say. Another volatile day.
Yeah, and it's definitely going to be, I mean, Neil, I thought last week was going to be the end of kind of like semiconductor earnings, but we do have some cool earnings coming this week. And we have Broadcom and Marvell later this week, which I'm pretty excited to just kind of listen to, especially as this whole AI is game over. And that's the new thesis, pretty much for a lot of AI companies. But overall, I'm pretty excited. I mean, yesterday, Neil, we kind of saw that cool investment from TSMC of an extra $100 billion. So yeah, overall, while the stock prices have changed, I don't think my mentality or thoughts on a lot of these names have changed at all.
Yeah, I agree. I agree. I think from a macro standpoint, we are still in a pretty good spot, right? All things considered, unemployment rate, jobless claims were a bit higher than expected, but all in all, 10-year yield comes down quite a lot in the last couple of weeks. Unemployment rate still under 5% quite comfortably. Yes, it's true now with tariffs, things can change. But I think we are still in a very good spot, all things considered. Yes, your portfolio might have taken a hit, but then again, you don't even have to zoom out that much to see that all in all, we're still up quite a significant amount in the last 12 months.
Yeah, yeah, Neil, and I feel like, I mean, volatility is going to continue. I think this is definitely going to be a year of volatility where we're going to get a lot of what I would consider opportunities throughout the year. Just because uncertainty, at the end of the day, the market is hates uncertainty, and with uncertainty, with tariffs, with retaliation by the tariffs, then by our response to tariffs, and how that just might impact everything else in the macro side just creates a lot of uncertainty. And I think that's the uncertainty creates volatility, and I do believe volatility creates opportunity for long term investors. For short term, it also creates kind of, in my opinion, opportunities for traders. But I'm not much of a trader. As a long term investor, volatility does create, and we do see some people that kind of took advantage of it. I mean, we have David buying Advanced Money Destroyer at 98. We have Sled, who bought Nvidia at 109. We have Tony, who bought Nvidia at $111. Um, so yeah, pretty interesting. Again, I think volatility is going to continue, and maybe tomorrow a lot of these buys might seem stupid, but it's possible that in a week these buys are going to seem extremely, extremely smart. And I think as a long-term investor, you tend to have data on your side that these buys are going to be pretty good in the long term.
Yeah, that's the thing, right? When things are green, then the companies that you hold are incredible. But when things are red and the same great companies are just a bit cheaper, things don't look that good, which again doesn't make much sense. I mean, a couple of weeks ago, all I've seen is, oh, I'm up year to date XYZ%. This stock will go 2x, 5x, 10x from here. Euphoria all around. All it took is what? For the markets to be down 10% or so from their all-time highs for sentiment to change completely, which usually is when things get extremely interesting. Like, we don't know when the bottom will be in, but if we can accumulate more and more shares of great companies at good prices, I think a couple of years from now we will be quite happy with what we have bought today. And to be honest, I would say 12 months, 24 months from now, we will completely forget what has happened this week, last week, and in the next couple of weeks, whether it's tariffs, whether it's a reduced GDP growth forecast because of imports. By the way, for those that have seen the Atlanta Fed number, it's basically because imports have gone up a lot because of the anticipation of tariffs, and that impacts GDP growth. So, again, things that in the short run, okay, will create some opportunities, will create some negative headlines. But as long as you keep buying great companies, I highly doubt you'll regret it in the long run.
Agree. Neil, here, just want to see Vlad. He bought some Amazon, Microsoft, and Google. I'm very, very excited about Google right now. We have some other interesting plays. I mean, someone's asking about Qualcomm at 155, and I think this actually plays really good to this question, Neil. Um, when is the bottom? And I think I'm gonna speak for the both of us here, Neil. I don't think one can really time the bottom, or I don't know how to. But I understand that as stock prices go down, if my company doesn't really change much, maybe it might move maybe some of the revenue projections later in time. Are things like this going to create any competitive pressure for the stocks? Like a perfect example is if massive tariffs come out, is Nvidia going to become a weaker company in forms of competition, or is everybody going to be in kind of the same leveling field still with just that added headwind? I think it's going to be more the latter than the previous one, as everybody would just get hit, and I don't think it's going to destroy the competitive nature of the companies that I own. So I don't try to time the bottom, but I think that's why I probably try not to throw all my money at once, because we know that the dip keeps on dipping and dipping and dipping. So one thing I tried not to do is put all my money at once if I'm trying to buy the dip.
Yeah, no, I agree. I mean, looking overall at the heat map, it is quite interesting today to have a couple of green big guys. Because remember, last time we looked at it, we've seen that health technology and consumer non-durables were the only ones greens, and we said like, oh, okay, I guess technology is not interesting anymore, and we're going backwards. But yeah, I mean, it's always the same thing with red markets. Like sentiment can change very, very rapidly. Your stocks are down. Some might lose money. By the way, you only lose if you sell. Like if you have a winning position, a stock is down, you didn't really lose much until you sell. Do you use stop losses, by the way?
I don't, Neil, because I've seen experiences where these stocks can go down. At least the stocks that I own can go down pretty quickly, and the next day they can give me those similar type of returns right back. So typically, I don't do stop losses because I feel like you end up losing a lot more than gaining. So just from prior experience, I don't use it, but I can definitely see why maybe some players would like to do it.
I agree. I think for trading, it makes sense. Long-term investors, I don't think. I mean, this I give the same explanation as you. Like, especially during these days, like a stock can go down, open up minus 10% or so, and then suddenly it rebounds, and then you're pushed out of your position, and now you have to buy back at a higher price, which is never really a good thing. Um,
And
other
and
than
just I would say I've probably made most of my money in investing, buying during these red days opposed to the green days. But you kind of see the opposite in social media and kind of even in the comments where it makes you feel dumb for owning some of these companies, right? They try. I don't know why bears kind of get this satisfaction, but I mean, Nvidia for me became a massive opportunity because I was buying it when everybody hated it. When bears were like, "See, this is game over for this gaming company," or "See, this is game over for this." So, from my prior experience, I understand that these are the days that suck. But these are the days that I'm like, hey, look, I'm happy I'm getting to buy at levels like this. Again, not all my money at once. Sometimes if we are in a bear market, if we are in a bad market, whatever, they can last longer than expected. But those buying opportunities are the ones I get super, super excited about.
yeah, any specific companies you've been eyeing more recently, other than the usual alphabet?
I mean, normally, Neil, right? For example, when it is red days like now, when the market turns to drop, I really just hone in on companies that I want to increase my exposure in. So it's usually very, very, very limited. So right now, in forms of my portfolio allocation, I want Google to be a lot bigger. So Google is one of those. Um, AMD, while it is already a big position, is looking good. Nvidia for me, it's looking attractive, but not enough for me to increase from that. Right, I've mentioned in previous episodes, it's already over a quarter of my portfolio, so it's not there yet where I would feel comfortable adding more and more. If anything, maybe I might try like some. I don't normally discuss it, but some option plays around it where I'm not completely too overexposed into it. But options is definitely something tricky that I definitely wouldn't recommend. Um, but yeah, Nvidia, Google, um, and if I was looking for maybe, I think the semiconductor equipment players, Neil, I think a lot of them are down a nice amount. And with that $100 billion investment from TSMC announced, I think that's just great news for equipment players in the long term of things.
Yeah, and I wanted to touch on that because they have been quite strong, all things considered, like Marvell. Lam Research, ASML, when all the rest was red, they were greenish to flat, which is very very interesting. Like if we look at ASML, still around the same price we've seen, I believe last week. Same with Marvell. Um, who else? Lam Research still at 76. It's interesting to see that these stocks right now, despite okay, today everything's green, but even yesterday these stocks were not hit that hard, the same as the others. Quite interesting to see Intel down now 6.3%. How the turntables from Intel 3 weeks ago to Intel now went from $27 back to $21.3. That's probably because of that $100 billion news from TSM. Maybe the US government does not want to work with Intel, or maybe we're going to wait and see if Intel gets an announcement as well. Although without an actual CEO, that could be tricky.
Yeah, Neil, I think that was actually one of my biggest takeaways from or questions here coming in from actually I had a few questions coming out from this TSMC investment. But one of my questions was like we in the past few weeks we've kind of been hearing about these joint ventures of Intel and TSM. And I feel like is this investment enough to kind of shut down those discussions? It's like, hey, look, TSMC didn't want to do any joint venture with Intel. Instead, they'll invest more money than Intel's market cap at the moment, right? So it's I wonder if this shuts off those rumors, which again, while I'm not an Intel shareholder, I believe together Intel has the opportunity, if succeeded, to be $1 trillion company. And a split Intel definitely is great in the short term, but I think the biggest opportunity is a together Intel.
No, I agree. The value that it can unlock is very very big. It's interesting to see it. Remember yesterday Intel was up 6%, then ended the day 4%, was up 6% because of the rumors that Nvidia and Broadcom were interested in Intel 18A. And well, look at us now, as if that
And,
never existed.
but I would say, Neil, I think sometimes the market gets excited for maybe a lot of nothing. I feel like no matter what, whenever a new company develops a node, you have the big players, you have your Nvidia, you have everybody always testing them out. Just because you test them out doesn't mean it's going to go into a customer. But I feel like news like that should have already been expected. If Intel's really working on 18A and they're saying that they're ready for some form of production in the future, you would expect these customers to at least test out, just pull out, do some tape outs. And I believe they've talked about it in the past where they have numerous tape outs for various potential customers. So news like that, just I find that it's just more headline and volatility driven, where I think most investors that I guess follow somewhat the semi space would have already expected those type of reports to happen.
Yeah, and plus, I mean, I did an Intel video yesterday, and I showed headlines from 2023, Nvidia talking about maybe using Intel. Headlines from 2024, same thing, and now we're in 2025. We get those headlines again. So maybe where there is smoke, there is fire here. But I do expect Intel to maybe announce some new companies, some new customers this year. I don't know who they're going to be, but maybe another type of Amazon or Microsoft would be quite something for the stock. But I think right now the focus is on whether or not the government wants to support Intel a bit more, and who's the new CEO going to be, because it's taking a while, and maybe that might be a good thing because that means that they're really trying to get someone good. Or I don't know, the board at Intel is just really incompetent, because I've seen, I think, an ex Intel CEO speak out and say that they should rehire Pat and fire the board, which, to be honest, I'd vote all my shares in favor of that.
I've owned my 0 shares for it, but I'll make it known that is something I agree to. Um, well, I'm not an investor. I do believe the company can turn things around, and I think Pat would be the right direction about it. Um, I also kind of had some other thoughts, Neil. If we kind of keep here with the TSMC news, because it was kind of big in my opinion. A few things that they mentioned is with this new investment, they're going to build 3 new fabs over some time frame. They're also going to build 2 advanced packaging in the United States. This is the first time TSMC is bringing advanced packaging to the United States, and they're also going to build an R&D center. So Philip is asking, what about TSMC doing advanced packaging in the US? I worry Taiwanese will lose their silicon shield. Now, I think right now it definitely is becoming an interesting time where normally, Neil, I'm not too worried about kind of this China and Taiwan and USA tensions. Um, and recently, I do believe that has increased, but it's not because of the current or current administration. It has nothing to do with that. It's more just with the evolvements of AI. And I mean, I think as we all know, AI right now is being kind of somewhat gatekept in forms of hardware to certain countries. One of those countries is China, right? And if Neil, if AI is really as crazy and as amazing as people think it is, wouldn't you kind of risk it all to make sure you have some of that AI pie? Wouldn't you kind of risk it all to make sure your other kind of adversaries don't take this whole market in this space, which will eventually lead to being extremely strong. So I think the evolution of AI might be creating for me not a big fear, but it's just increasing it by a little bit more. Those China and tensions, and it has to do more with AI as a technology. Is it becoming too crucial that you can't be left back behind in this space? If not, it would be kind of like a game over for an era. So something that and kind of seeing TSMC moving here more into the United States, is it them kind of maybe seeing the risk a little bit higher, or is it really just pure growth that they're seeing in their end, and they just want to increase manufacturing capacity dramatically? Because Neil, I mean, it's $100 billion investment here. I don't think this is because they don't want to get tariffs. I don't think any tariffs that they get hit with is going to be worth $100 billion in X amount of years, no matter how you see it, right? I don't think this is a way for them to be. If it does protect them from tariffs, sure, but I don't think they're just going to make $100 billion deal just for tariffs protection. I wonder, is it pure growth that they're seeing? If so, that is super amazing. Um, and if not, what is the other thing that they might be seeing that's pushing them here? And as a TSMC not investor, but for TSMC investors, I think 2 questions should be important. One, was this investment part already of this capex growth that they mentioned this last earnings, or is this something new? And question 2, they've mentioned that overseas fabs are about 2 to 3% margin hits. Again, was that thinking of this already as an investment, or will this added investment increase that margin pressure from 2 to 3 to maybe 3 to 4 or 3 to 5%? So I'm going to be very curious to hear about that in the upcoming earnings 2 months from now, to see if capex changes and if margin outlook changes.
Okay, lots to unpack here. I have a couple of questions. First up, this might also be like we are investing now $100 billion in the United States, but we want maybe some reassurance that whenever something might happen, you have our back in Taiwan. Could be something on the table. Second, I still think that the most advanced nodes and packaging and all of that will happen only in Taiwan, from what I've seen and from what we've heard from TSMC themselves. And then the last things here is who will work at those factories? Because currently, I think in Arizona, most of the employees are from Taiwan, if I remember correctly. So you invest $100 billion, but the jobs that you create are actually for Taiwanese people. It's quite strange, you know. So great all in all to have more and more of that happening in the United States, but there are definitely a couple of questions that we will probably not get an answer anytime soon. And that's just not just with TSMC. I saw someone comment this a couple of minutes ago. With a lot of those investments in the United States and having close to full employment, I mean, if you want to create more and more jobs, of course, there's always someone that's looking for a job. But if you're close to full employment, how many more jobs can you find, right?
Yeah, definitely. I mean, a lot of questions, and I think obviously all these investments and all these macro pushes are things that we're not gonna see an impact today, this quarter, next quarter. Is something in both the macro and the micro for these companies are something we're gonna see in the upcoming years. So we get the news now, but we probably won't really see the impact until many years from now or many quarters from now.
Also, one thing before I forget that, China actually shows that it can compete, sort of, right now without having fully American products or without having full control of Taiwan, I would say. So as they evolve and become bigger competitors with their own technology developed in mainland China, do you think that they're still going to want to risk a big conflict, or are they like, you know what, actually our technology is working out quite okay?
I think if they become more self sufficient, and we are seeing some improvements or things like that, and I do believe sometimes like these bottlenecks or neck grabs, force. I think humans, no matter where, when you have a problem, you are forced to innovate. And that's the great thing about humanity. That's the reason we've survived various types of eras, is because whenever we get a problem, we innovate some form of medicine, some new technology, whatever, and so forth. So I do think kind of like the export restrictions and regulations into China forces them to try to find a way to either innovate in other industries. That's why we see kind of that DeepSeek moment. We kind of see Huawei, a Chinese player there, being able to provide some form, nowhere near to the level that we are, but some form of competition. I don't know, competition, some form of solution, at least some viable solution in the AI chip market. So I think maybe as you start to see, if you see self-sufficient, that might actually be great for the tension easing between maybe these nations.
Yeah, no, I agree. I also like the fact that a lot of the big tech companies are starting to create like programs to train um, people to be more specialized in the future jobs like AI, chip making, whatever, machinery, and all of that. I think that's lacking. And it's great to see the investments. Oh, a company here, a foundry there. But eventually you'll need people to work there. And if you have a lack of, let's say, specialists or whatever you want to call them, it's very good to see that these companies are also focusing on the education side of things. Because eventually you're going to need just more and more of these types of people in the workforce.
Yeah. I think, and that's one of the things that that has been pushed a lot recently. I've seen a lot of programs in a lot of these, at least areas where you're developing these manufacturing plants, where they're trying to push um, more either electrical engineers, more electrical technicians to be increase the talent here. And it's going. I think that's just overall great um, for a country in general. Um, Neil, so question here from Wendy. How do you think TSMC's big investment in US is going to, one, help Nvidia? I think in the long term, if we are obviously supply constraints still, things like these expansions can help with the supply constraint, as now TSMC will have advanced packaging solutions here in the States, and also the manufacturing of wafers. The other thing, Neil, is, remember, these fabs are going to take, it's not something that gets built in a year or two. It takes about at least 3 years to start initial production. Um, so if, to me, if they're investing here because of pure growth, they believe that in the next 3 or 4 years, they need huge amount of supply chain growth. And if there is the new growth of supply chain, it probably means there's some new technology happening. Probably that's kind of driving that growth. Is it really robotics? Is robotics really the next something happening the next 3 5 years? Is it kind of completion of autonomous vehicles or other forms of mobilities? And I think that overall just sends a great bullish sentiment for the long term of semiconductor stocks, including Nvidia. And the advanced packaging facility, in my opinion, shows a huge bullish trend for the AI market, AI chip market, because AI chips are usually the ones that use most of that advanced packaging solution. So if you increase that capacity, they will be able to have more products for the AI space.
Yeah, no, I agree. I think I've also seen plus I can't remember the name of the guy from TSM that made the announcement, but he did call out Nvidia, he called out Apple, Qualcomm, AMD. He left out Intel, although Intel is a customer of TSM. He left out Intel, maybe on purpose, probably on purpose, because if you name Nvidia, AMD, Qualcomm, and all the rest, and you don't name Intel, I think you're doing it on purpose. But yeah, I think it's a net positive for sure.
Yeah, I agree. And Nvidia also posted a tweet. I didn't see Lisa Su's tweet, Neil. I did see Nvidia say that they would be they're excited for this investment and will help support this. And I'm guessing that support will be by being a customer of theirs when it gets built out, to kind of build more chips here in the United States. First, just I want to kind of I Nick, electrical engineering is one of the best bangs for your buck degrees you can get. I agree. Neil, that's where I came from, and if I was to go back in time, I still would be an electrical engineer. I think it was the school I went to wasn't that crazy expensive, and the salary you get right off the bat and the different types of markets you can work in is insane. So, hey, if you have a kid, definitely try to push them into some form of engineering, especially electrical. Hopefully, some of my civil friends are watching. Civil engineering isn't real engineering. Quick shots there. But electrical engineering is definitely amazing, and you get to work at some amazing companies.
I'll that's true, by the way. But I also think that blue collar jobs are going to make a huge comeback. I mean, I've spoken with a couple of folks in various industries. I mean, in industry where you have to work with your hands, basically, and they make a ton of money these days. A ton of money, like simple jobs, but simple jobs these days, not a lot of people have time to do it or want to do it, so they're willing to pay. They're willing to pay like a software whatever at Apple or Google is making enough money to pay someone to, I don't know, mow his lawn, fix some things in the house. And I think there is a big comeback for blue collar jobs, and to be honest, it's a positive for the economy.
100%, and that's a great. I mean, obviously, we're not going. I don't know how we ended up going into some form of TED talk here outside of just the stock market. But I agree. I mean, I feel like to be successful in life, you really don't need any form of true education. You just need to have a passion in something, and whatever passion it is, someone's going to pay for it. Obviously, like you mentioned, I mean, plumbers, for example, there's everybody takes a crap, and everybody doesn't know how to fix the plumbing job. So you can make a lot of money doing something like that. So yeah, manual labor jobs and anything. I think right now is definitely in there. If you have a passion in something, the market will pay. Um, so let's see some other questions. Neo here, Greg here mentioned Jose Najarro. Air, did you hear latest news? Confirmed shipments to big AI customers with revenue going to be reported into this upcoming earnings. So I really do enjoy Air Test Systems. This is one of those less than $1 billion equipment players with a lot of growth opportunities. I have a nice position, but I would say this is one that could go either direction, as a lot of their revenue depends on the automotive space. While they do have that growth opportunity in AI customers in other industries as well, like IO and optics. I'm very excited for them, Greg, in the long term of things. I'm going to maybe read up a little bit more of these AI customers, if it's changed from what they mentioned last earnings, or if there's something, Greg, is this something that just came out today? Um, but yeah, pretty exciting for Air Test System. But again, it's a small company with it's that risk to reward play, in my opinion. But I am bullish in it.
I've seen a lot of comments and questions about SoFi, so I'll address it already now because I think plenty of folks are asking and have been waiting. So apologies. We've been talking about plumbing and other things today. Um, but yeah, SoFi is taking a dump today, more than the rest, although fintech as a whole is taking a dump compared to semiconductors and other names. As you can see, SoFi is down 4.57, no, 64%. I believe there was also a report from the usual bear, KBW, that came out with another $8 price target. They always come out when when sentiment is negative. Me personally, I like SoFi, bullish on SoFi, picked up more shares of SoFi. So doesn't scare me, to be honest. I mean, remember a couple of weeks ago, we were what, closer to, let's see, $18 or so? Let's see, a month ago. No, yeah, less than a month ago, we're above $17. Everything was quite okay. Now that we're down, it's suddenly turning into a bad company. Nah, to me, I just see, okay, more shares of a great company. Market will do whatever it wants. Same with PayPal. I think these prices are quite silly. I mean, they can buy back, what is it now? Almost 10% of their float. So yeah, silly prices. But in the short run, like we keep saying, the short run, the market can be very irrational, and that's usually when you make loads of money. I mean, during red days, usually good investors, those that don't let their sentiment take control of their strategy, red days is when you start making more money, because that's when you start buying good companies at cheaper prices, and then you can, if you want, take profits when things get green and extra green. So with SoFi specifically, I still like it. I liked it before. I like it right now. I like it at 11, at 10 if we go lower. And that's the thing, right? When we see a stock price, Jose, you said Nvidia, you liked it at 120, you liked it at 115, you love it at 100, you'll love it even more under 100. Um, so yeah, behind every ticker, there is a company. If you know what the company stands for, and you know if you're getting good value, it's much easier. It's much easier.
Yeah, I agree, Neil. I mean, and I think a lot of these stocks, right? I mean, we're probably, the bull thesis are still intact for like the companies that I follow. Obviously, I can't speak much for SoFi because I really don't know anything about it. But if the thesis is intact, like you mentioned, that as long as your valuation, you like the one part for valuations at those private levels, and you still like it here, obviously you're gonna enjoy the stock price a lot. I mean, AMD, for example, is a prime example for me, Neil. AMD is one that I really enjoyed anywhere below 130, 140. And right now we're sitting at 100. My bull thesis hasn't changed. Overall, I am very, very bullish on AMD. And that's why, again, I'm very lucky that even at 100, I'm still very far off from small flex from my cost basis here for AMD. But these are levels where it's just like, man, this is now sitting at a market cap of 160 billion. If the evolution of AI is real, like I see it, I could see this being a $500 billion company in 5 years. So now I'm getting closer to a 3x where maybe I used to say it was a 2x. And Josh is very true. I mean, I even said it now. Like, I used to say AMD was great under 150. I believe that still, and now it's just the same. So Josh, I'm not gonna like deny those facts. I talked about it already. And again, this is a company that can be $500 billion, in my opinion, in the next 5 years, and could be even larger than that in the long term of things. So if I'm able to buy more now and increase my overall position, that's okay with me.
Yeah, facts. Um, Matthew here says short term is hard for traders, not investors. I agree. I mean, I've been increasing my AMD, my newly AMD position quite aggressively, because the market just gives me better prices on a daily basis. Under $100, I'll take it. At 100, I'll take it as well. I bought at 110. I mean, the value that you're getting today with AMD is quite something. I know it's fun. I mean, it's not fun, but a lot of people make jokes. Look, it's down 51%. But then again, it deserves to be down, because it should not have been at $200 to start with. Let's let's be honest here. Should it be trading at $100 right now? Maybe not, maybe not. But again, short term, the market does whatever. I mean, a couple of quarters from now, we'll get way more information about the business itself, the next generation of GPUs, how that's doing, and I fully expect good news to come out of AMD. Because if you study the company, if you listen to what management is saying, I really don't see how they're not continuing to grow, how they're not going to increase free cash flow. So when you know these things, this minus 51%, or even the last couple of months minus, what is it, year to date, 17%, doesn't really scare you that much. Now I know I'm in a, let's say, luxury spot, because I only opened up a position more recently. But that's the thing with these types of market movements. Short term, hard
And,
for
yeah,
traders, not investors.
yeah. And I think, I mean, as a bull market gets longer and longer, Neil, I feel like the patience of investors gets shorter and shorter. Right at the beginning, after a bear market, and we kind of experienced one um, just a few years ago. I mean, right, AMD was trading a lot cheaper. Nvidia was um, and like the 13s and so on and so forth, right? All these companies. And when we start to see small returns here and there on a month basis, we start to get really excited. Now in the market, if you don't see a return in 5 months, in 6 months, it's like, yo, this is the worst investment of my life. But even in a business, right, you don't normally see that owning like your own business. It takes multiple years from you to kind of really see some results. So companies like AMD, sure, it might, and Nvidia, right? Even Nvidia has been kind of quiet for like the past 6 months. And I'm like, that's okay. All right. That's fine. Maybe it might underperform one year. When I'm looking at it in the long term of things, I believe in the next 5 years, NVIDIA, AMD will completely outperform the overall cues, any form of tech index, any form of just overall market index. So um, to me, it's okay if a company doesn't move. And I say 5 years, these stocks will outperform. To me, Neil, I'm 100% fine saying that if a stock doesn't move for 4 years, is great. And then on that last month of that fourth year, right before the fifth year, it completely outperforms the market. I'm gonna, as long as my thesis is intact, I know I'm gonna be holding, and I know I'm gonna ride that way up. So who cares if for 4 months, 4 years it doesn't move, and then by the last month of the last fourth year, it outperforms the market in the past 4 years in general. I'm still a okay. So I think the market just gets really, really impatient, and investors tend to follow that as well.
Yeah, no, I completely agree actually, because in the last 2 years, especially, we had two great years in the market. And I think retail is just looking at the returns and they're like seeing, oh, this stock was up 50% in a year, 100% in a year, maybe even more. And many think this is normal, but it isn't. It was something special because we came out of a quite harsh bear market after a huge bull market. So things were quite cheap, and then you just seen a correction, but on the upside. But usually investors should be happy with a 20% gain, 15% gain in a year, which are still beating the market. And that's the thing, you should compare yourself to the market. If you start comparing yourself to another specific stock or another specific person's portfolio, that's usually when you start making mistakes. Like, I'm down year to date, but I'm still outperforming the market overall with my portfolio, which means I'm still doing okay. Like you said, if for 4 years the stock that you hold is underperforming, but that last month of the 4 years suddenly it starts outperforming, and in total you are outperforming quite comfortably, I see zero problem with that. A lot of people will say, oh, but that's opportunity cost. Well, in hindsight, maybe yes, but in real time, no, because you don't know. Like, oh, you should have bought this stock and not that stock. I have this with PayPal, for example. PayPal, although I'm, believe it or not, I am in the green with PayPal. It's true that if I would have picked another stock, I would have been up more. Okay. But if my thesis is correct, then eventually I will outperform by a lot with PayPal. Of course, they still have to execute correctly, etc., etc. But so far, if they execute, the thesis still stays the same for me. Alex Chris, in my opinion, is a great CEO. I'm fine with underperforming with PayPal, specifically in the short run, as long as in the long term, I will see them outperform by quite a lot.
I agree, Neil. And I want to bring this point up from Matthew Johnson. I think he brings up a great note for, and sometimes during these bull markets, right, Neil, we get a lot of new investors. So it's great to kind of remind some of the new investors. And Matthew goes, I hope people aren't going all in and can't afford rent and mortgage. If you are, you are just gambling. Normally, Neil, I've never really seen someone like that before, but true. I think when you, even if you invest more than you could have, it creates emotion. I think the biggest weakness for investors is that emotion, because that's something you can't control. During red days, emotion weak hands and sell off, and I think that's why these bears come out a lot during these red days because they have been so sad during this whole bull market that when we have red days like yesterday, they're finally getting so happy and happy. And then you have days today when you kind of have a nice kind of maybe some green in the tech market. But emotions is the one thing that you can't control. And well, it doesn't make sense, right? I do have a nice amount. I have about 6 months of cash in a high yield savings. Obviously, cash is probably the weakest thing to do, and many people tell you it doesn't, but it gives me that complete emotion free holding in a portfolio because I know this money is not money. If I get, I don't get laid off, but let's say maybe my wife gets laid off or something. Um, we don't I don't have to sell stocks right away. So emotions, I think, and is one of the most important things to be able to get rid of in this investing world.
Oh, I 100% agree. I think emotions make up a large part of an investor's journey. The decision, of course, buying and selling is a big part of the research, but emotions willing to sit on your hands and not sell during red days is a huge part. Huge part, I think, especially we as humans. Of course, algos will do whatever they want and future investor robots as well. But we as humans, sentiment, I mean, we see that, right, in our comment sections on uh, on YouTube a lot, right? Green days, rockets all around. Red days is like, this thing goes down 50%. This thing is a shitco, whatever. It's yeah, we are humans. It's interesting. Um, but yeah, I also want to say that today, like remember back in 2021, 2021, the peak of 2021, although we couldn't have timed the peak, but valuations were insane, right? Of course, in hindsight, I mean, incredible. Today, I don't have that feeling at all. I think markets are near all-time highs still, but there is a wide range of companies that are trading at very attractive prices today compared to what we had in 2021, which makes me as an investor way more comfortable. Like I know people say, oh, I expected 30% correction. I'm like, we could happen, but I don't think we're in the same spot as 2021. Far from it, actually.
I really love the very constructive chat that's happening, in both our in I don't know, I think it's in your chat, trying to figure out the real new AMD slogan. So some all money disappear, advanced money destroyer, and the list goes on and on. So I appreciate the hard work that's going on in your chat, Neil. It's definitely needed during these days.
Should create some t-shirts.
But Neil, anything else you kind of want to talk about? And first, just Mario, right? I mean, a 15% um, a year is great, considering kind of the market average is about 10%, so 100%.
Yeah, no, I agree. I agree. Of course, we as younger investors, we always want to chase above average returns because we are exposed to more risk. So more risk, we want more reward. But yeah, on average, I think 15% is very good, especially if you can do this consistently. You'll probably end up being a legendary investor if you stay in the market for a long time. But yeah, I wanted to say something, but now I forgot. Shorter memory loss.
Just shout out here to Aaron. Gave us some thanks for all the information and support. Um, Said you guys are amazing. Appreciate it. Um, this is an interesting question. What would be Palantir price to get in back if you even plan to get back in? So, I know you get a lot of um noise about Palantir because you did sell some share. I don't know if you sold your full position or you sold
Yes,
just some
full.
shares. You sold full position. What would be kind of your entry level? And I'm just same caveat. I wouldn't say I also probably sold maybe around similar times as you. But I haven't sold completely my shares. So we'd love to hear your thoughts on maybe when you think of buying back in.
So before the earnings report, I I wanted to get back in. Well, I wanted. I can say whatever I want, right? Because I don't have a position, so I can wish for the stock to go down more and more. But in my head, with the data that we had, I was willing to wait until the high 50s, low 60s. Today, I don't know if that's going to happen or not, but based on the results that we got, the guidance, I'd probably get back in the high 60s, which is yes, another drop from here. But like I keep saying, I'm in no rush to get back in Palantir, especially not with all the other stocks right now in the portfolio, the AMDs, the PayPals, the SoFis. I think valuation wise, they are trading at way more attractive prices, despite me very, very much liking Palantir as a business, just because I like it and just because I've made plenty of videos about it. I've been following this company since it went public. I've held it for a long time, but now I'm out. Just because of those emotions doesn't mean I have to force myself to buy it at a certain price and then say, oh, look, I'm back in Palantir. Great. I can make a video. People will like me again, blah, blah, blah. Like, it doesn't make any sense. Like, I rather wait and still stay on the sidelines, see what happens. And maybe, I don't know, in a quarter or two, I would like to get in the 70s, maybe in the 80s, depending on the reacceleration or the continued acceleration in growth in Palantir. Because in my eyes, based on what I know, based on what I did, in my eyes, still close to $200 billion in market cap currently is a bit too much to me. Like, we just said, like, AMD is what, $160 billion. I know you cannot compare both companies because one has super high margins, the other one still making chips, but still, you have to make a decision as an investor, and I rather not make the emotional decision, the one for the content, but the one that will make my returns greater in the future.
Yeah, agree, Neil. I don't, and I mean, with a lot of these stocks, right? I wouldn't say while they have dropped in price, I wouldn't be surprised if a lot of these, even some of my AI plays, all right, I'm not trying to show shade on anything. A lot of these AI companies, semiconductor companies, software companies can still take a bigger hit. As I mean, we can see in the past 6 months, a company like Palantir is up 172%. Um, that doesn't happen very, very often. So I'm not trying to throw that negativity, but I think as investors, one should always be prepared for that possibility. That I think sometimes owning an investment, obviously you want your stocks to always go up, but the market hits you in the face and it can go lower than you thought it could. Um, but overall, pretty. I don't know when I would like to add more position here to Palantir. If it was, maybe I'm not saying it's going to get there. I think, like you mentioned, probably in the 60s, 50s is where maybe I would get a little bit more excited. But again, I do have a lot of exposure into the AI space. So again, that controls the reason of when I would want to add. I'm not saying it's getting to there, but if you're telling me, Jose, when would you buy? It would be if we ever get to those levels. If not, that's okay. I'm riding the AI wave some other way.
Yeah, that's the last part that you said. It's okay. I'm riding the AI wave somewhere else. That's exactly that. Like,
Another way. You got to say it, Neil, like that because it rhymes.
yeah, okay, fine. Watch out, huh? And you might be unemployed by Thursday. But yeah, like, we don't have to. Like, I know I like New Holdings, the fintech company from Latin America, from Brazil. I like it a lot, but I'm already exposed to fintech through other players, through Mercado Libre, to PayPal, to SoFi. It's a great company, New, although New at around $10 or so is in my opinion very, very attractive. But I don't have to open up another position. Like, I don't have unlimited money to start opening up infinite amount of positions, because eventually it will not make any sense. Like, opening up 10 positions of just 1% of the portfolio, it won't make much sense to me. Even if those are great companies. But then again, I also own great companies in the portfolio, so there is that. I do want to thank Louis M for becoming a member of the channel. So thank you very much. You are now a couch investor yourself.
And again, Neil, I think we get sometimes when we think, I don't want to put this person on blast, but it's like, just because we say that's when we're going to buy a stock, it doesn't mean we think the stock is going to go there, right? That was not the question. Our question was, when would we buy a stock? So I feel like sometimes when we say when we will buy a stock, it means the stock is going to drop. I don't believe, I'm not throwing that bearish sentiment to Palantir. If it doesn't get there, that's a-okay. But that's when I would want to buy it. And the bears and the bulls sometimes just get me too annoyed, Neil. But again, they don't want to put the person on the spot, but just want to make sure they understand that we're not saying the stock is gonna guarantee get there, but that's when we would like to buy.
Yeah. I mean, we're just answering a question, right? We didn't say it's going to go to 50. We would love it to go to 50. And I think most, if not all, long-term investors should love it at 50 as well, because that means you can just load up more shares on that position. But yeah, it was over $124 not so long ago, still up year to date. We would love it in the 60s, in the 50s. Doesn't mean we want it to go or it's going to go. Just answering a question here.
Here we got another question, Neil. Do you like Google at 170s? I mean, I think we were talking about it in the 180s. I really do enjoy. I think Google is one of those plays that I enjoy it for its clouding market growth opportunity right now. I think the market is sleeping on that cloud growth. Um, that cloud growth with them being able to design TPUs from Broadcom, that might be a question we can talk about. I saw a few questions about Broadcom. They do report earnings, but I think the clouding market, they're doing great in advertisement right now. Great in advertisement, great in YouTube ads. They have so much data to be a crazy, crazy player in the AI market, which we're seeing. And obviously, they might not be showing the best that they have right now, but I think the biggest and the lowest hanging fruit for them that no one is seeing is the cloud market. I think that cloud space can grow and take massive market share from Amazon and Microsoft.
Yeah, no, I agree. I mean, even I think today, yeah, today it was at 166. Oh, okay, up $4. I mean, I've seen some comments. I think Nvidia was, yeah, today. No, this was a year ago. Nvidia today was at 110. To be honest, I mean, does that $6 difference make that much of a difference from the bottom of the day? To be honest, not that much. Like it's a 1% or something like that. So not much. But we love Google. We've been talking a lot about Google Alphabet. I mean, even Amazon. I mean, Amazon I saw today went under $200. It's now at 102, big deal. But yeah, at one point it was at 197, which to be honest, I didn't notice that Amazon fell from the $240 it was basically a month ago. So very interesting market action all overall.
So do you think good chance for Marvell and Broadcom to be earnings given recent news items? Um, Well, I think they be earnings. I think yes. I think both Broadcom and Marvell can be earnings. The only thing that I would say you have to be careful with is one of the biggest growth opportunities for them right now is the AI chip space. And they're buying kind of for Marvell, Amazon is buying their chips, and for Broadcom and Google is buying their chips and some other players. But Google definitely makes up a big front of their custom GPUs or custom ASICs. I want to say the biggest, we talked about it in their most recent earnings, Neil, about 3 months ago, that the ASIC market, even though for Nvidia is kind of going up on a strong, even sequential basis, it might not be the same for ASIC market. They mentioned that it has a lot of variabilities. So maybe like, for example, Google might make a big purchase this quarter, but then next quarter they might see a decline. And that kind of volatility of sequential decrease could create volatility on the stock price. But if you look at it in more of like a trailing 12 basis, I think you're going to be a little bit more excited about them. But I think the market cares more about sequential growth right now than year over year growth.
Do you think Broadcom will talk about a new customer?
I mean, there's been reports that there actually might be losing a customer with export restrictions. There's been talks that ByteDance might no longer be a player for them. So I wonder if that's going to come up in the conversation. In forms of new customer, I mean, they gave us a huge servable addressable market last quarter. And it only included 3 customers, and they were working with other customers, but they didn't have kind of that data because like we heard from Jensen, just because you design a chip doesn't mean it's going to go into production. So that's what he was saying with those other customers. If we get maybe more of a positive reaction saying that, hey, look, numbers are looking good. Maybe we can see an increase in that servable addressable market. And I just want to give a quick shout out, Julie, here. Having Nvidia at these levels is criminal. I think after those earnings, I mean, now Nvidia, forward PE ratio in the high 20s, low PE ratio. I think yesterday, forward 1 year, yesterday was around 19. I mean, if you think the AI market is going to continue, which I believe I agree with Julie, these levels are a bit criminal. Price to sales ratio was one of the biggest bearish thesis for the stock, trading at over 30-ish or almost 40. I think that has come down to like 20 now. But yeah, I'm not saying the stock can't go lower. Obviously, the stock can't go lower from here still.
And remember, this is a business, hardware and software, with margins of 70 to 75%, which is quite insane. So it deserves a premium. Yeah, I mean, there are plenty of stocks that at these prices are are quite criminal. I do want to show you one thing: the U.S. defense names. So this is a company out of Germany, Rheinmetall. Look at the year-to-date performance. It's up 92.4% year-to-date already. We've seen a lot of talk. Rolls-Royce up 47% year-to-date. A lot of talk in Europe actually of increasing defense spend. Saab up 66%. So yeah, Europe is making a comeback in the market. It does seem. We have here this is a French company, also up 43.62% year to date.
They're French for some reason. I thought they were American.
I believe they're French. No.
Yeah, maybe they probably are. It's just
no, they're UK, but I think
UK.
they have something in France, if I remember correctly. But yeah, it's quite interesting. If you look at the European markets, they outperform the US by quite a lot year to date. I mean, I think even the Chinese market, it's a UK company. So there is another company that was from France in that list. But yeah, Chinese European markets are outperforming the US markets right now, which is very interesting. Especially the defense space in Europe is quite interesting, because in the US, we've heard like 2 weeks ago that they want to cut a little bit of defense spending, and now in Europe you're seeing they want to increase it by quite a lot. And to be honest, I mean, I've been watching this space for quite a while, so to me it's a missed opportunity. But yeah, it's interesting. Very, very good companies, to be honest, in Europe. Very good companies.
And then, so this week we do have Marvell and Qualcomm. I think both of these are going to at least show some good strength here, Neo, in the kind of networking space that they hit. I think the biggest volatility and what the market really just cares about is AI right now. So Marvell wasn't a huge fan at 120s. I don't know where it's at right now. Yesterday, I know it's like an 88. I think 88 I enjoy it at those levels going into earnings. And I mean, we've heard those great positive news from Amazon that they're going to invest a lot in their Trainium 3 chips, which is going to be great for Marvell. I also have a question here, Neil, and I'm coming into the top of my end. So if you have maybe one question or two that you want to take before I head out. Aaron here. Any thoughts on Credo? I don't follow it too much. Aaron, I'll probably they have earnings to I think Marvell has, when do they have? Sometime this week. Marvell is reporting. I don't know if it's today or tomorrow. And Broadcom is Thursday, I believe. But Aaron, I have no real thought process that I can share any value here with this one.
Other than that, I think we're good. I mean, all in all, I think right now stocks are recovering a little bit from their lows of today. But then again, we've seen that on Friday as well. Started off pretty bad. Midday started to recover a little bit. People were excited. Then bam, on Monday and on Tuesday, we got hit even more. We are now in an uncertainty type of environment, which, to be honest, 6 months from now, maybe a month from now, who knows? We might have forgotten completely about all of this. I think from most of the companies that have reported, lots of good results. Commentary guidance was, in my opinion, quite good across the board from the big tech players, even some retailers as well. Target reported today okay results. Walmart was a bit light on guidance, but Amazon was fine. Only FX headwinds, which by the way, most of these big tech players, if the dollar does get a bit weaker, most of them will have an extremely easy time to beat their own guidance because of a weaker dollar, which is something we all have to take into consideration, which is a positive thing. Now, of course, there are some companies that will get affected negatively from a weaker dollar, but most of these big tech companies will definitely benefit from that. So again, I just don't think we are in such a bad place right now. I just want everybody to calm down a little bit. I know, I mean, I've seen my portfolio. I've lost quite a lot of my paper money because I'm just buying, I'm not selling. But think long term. I think there are a lot of deals. As you know, we've been accumulating the companies that we like in our portfolio, and I think we will be quite okay in a few years from now. So yeah, anything else you wanna add?
Well, first, I definitely want to mirror that. Like you mentioned, portfolios are down, but overall still good. And long-term mentality just helps you push through these red days and just ignore trying to hear about why this is all bad news. The most important thing is as long as you understand your investment, I think understanding your investment, again, with not being over leveraged can be massive strength for not having crazy emotional action. Just a final thing, Neil, for anybody that wants to kind of get daily semiconductor news, check out whatthechiphappened.com. It's a free newsletter, Neil. Today, I talked about TSMC's investment. I talked about Nvidia's. They had a conference yesterday in the healthcare market. And I talked a lot about Marvell, which just announced kind of a new update on their 2 nanometers. So if one is curious about the semiconductor market, definitely check out whatthechiphappened.com.
It's free, so I mean, why not check it out, right? Like the subscribe button, it's also free. So why not push that button? But yeah, by the way, Uber, we are Uber shareholders. They did launch with Waymo in Austin, I believe, today. So good good news on that front. So yeah, anyways, that's all we've got for you for today. We'll be back on Thursday, same time as
Oh,
always.
man. It's today only Tuesday, Neil? This is going to be a long week.
Is
Yeah,
it
it is
today
Tuesday, right?
Tuesday? Yeah,
Yeah.
Tuesday. For a second there, I was like, wait. But yeah, we'll be back Thursday as always. Hopefully by Thursday, markets are a bit better. But to be honest, doesn't really matter for long-term investors. So thank you all for joining. See you all in the next one.